What's up, guys? Welcome back to another Thompson 2 cents. This week, I have a special guest joining me. You can bring him in. Gene, we'll be talking to one of my good friends, Justin Spittler. Justin has been a friend of mine for a couple years now. And one of the things I love about Justin is in this type of markets, you guys kind of understand, I look at the market regime. I kind of do a lot of big picture breadth work, understanding maybe what part and stage of the bull market we might be in, what sectors might be leading and lagging, rotational analysis, things like that. Justin is one of the best stock pickers I know. When it comes to just finding stocks, finding the best stocks in the world, Justin is my guy. So welcome, Justin. Happy to have you on today. What's up, guy? Might be muted.
Sorry about that.
You're
Oh,
good.
no, thanks for having me, Larry. Yeah, let's rip through some charts, man. I'm excited.
Let's do it. So how we're going to start today is I'm going to give a general overview of the markets, just kind of what we're seeing. And then Justin and I are going to piggyback each other, looking at some, like I said, some of the best stocks in the world. Justin tends to trade them. I tend to watch a lot of them, try to get involved where I can. But let's just start here. Taking a look at the S&P 500, right? Zooming out, this is a weekly basis chart. On the top panel, we have momentum using RSI. On the bottom panel, we have the S&P members percentage above their 200-day. And then in the middle, we have price, right? And so you can see the past three cycles, the past three recoveries. And the reason I start with this chart this week is just online and in the news, you're hearing a lot of anchoring to the April low. We're up this much since the April low. The market's gone in a vertical line, et cetera, et cetera. The thing I want you to do is if you zoom out, right, and you're an investor and you're looking at a longer time frame, this is typical, right? We're just now got the recovery and the new uptrend to a degree has just broke out, right? We just had an up week in the markets, and you can see here that RSI is above 60. We made new year-to-date highs in percent of stocks above their 200-day at 67, but we're not that extended the way people are anchoring to the April low. They're not anchoring to the highs, the previous highs, they're anchoring to the April low. And I just think this context of the market is something that people are getting confused by. I wrote something this week. I'll have Justin chime in a minute on it, but I think the way I've lost the most money in the market is by trying to anticipate a pullback from the actual S&P 500, disallocating money in advance of a pullback, trying to time it perfectly instead of just zooming out and looking at the primary trend. Justin, do you struggle with that at all?
Yeah, I wouldn't say it's the reason that I've lost the most money. I think everyone's different. I just well, sometimes will get too aggressive. I'm a little bit of a degen at heart, but I think in the past that has been something I've had struggled with. But this cycle, just have some a little bit more experience under the belt, and so there's been times where I thought the market was going to pull back, and every time that's happened, since the April lows, the market's just proven to be incredibly resilient. So I'm just going to wait to see actual evidence of deterioration, and even we have some days where I think the market might be about to pull back, and we just end up getting rotation. And so I don't think you're right at this stage. In the bull market, I don't think now's the time to be thinking about tops. I think you want to just sit tight and know that volatility can pick up, but a lot of the volatility we've experienced lately, for example, cybersecurity stocks got hit really hard for a few days, and now they're starting to bounce back. I think Cloudflare had its highest weekly close in a few years today, but a lot of these little pullbacks, little scares in the market have just been rotation. So just understanding that that rotation's happening, and it's a healthy process, and it's something that the bull market needs to sustain itself.
Yep. So that wall of worry sometimes, right?
Yeah, exactly.
Cool. The next chart I just wanted to highlight, kind of a similar subject here, is once again thinking about where we are in the cycle and thinking about kind of the markets and how I just see a lot of people trying to get out too early. And what we're looking at here is the S&P 500, new highs on the top, new lows on the bottom, and then net new highs minus new lows in the middle. And this week we made new year-to-date highs in this. And so what does that kind of symbolize to me? What that symbolizes is the fact that breakouts are working, right? Because if breakouts weren't working, you wouldn't be getting new highs. And what's that also mean? Breakdowns are failing, right? So something like healthcare, for example, that looks like dog crap, right? We can admit healthcare looks like dog crap. You're seeing it actually start to get a little rotation into it this week. And that's what you see in the bull market is you see a little bit of rotation underneath the surface, right? And what people are doing is they're trying to call that defensive, right? Oh, we're about to see defensive rotation because healthcare's up one day. And I think you can just overthink those relationships when the reality is it's just those stocks are not breaking down. You're seeing funds come in a little bit, but you haven't seen it gain traction yet. So it's just something to keep in mind that you don't have to hurry up and try to get this defensive rotation that people are talking about because the stock market just started breaking out and breakouts just started occurring again, right? New 52-week highs just started occurring again. Look at last year. All right, look at 2024, how consistent and persistent and how many new all-time highs were occurring, right? New 52-week highs were occurring. It looks like we're just getting started. So once again, just zooming out a little bit like what I do, and this just plays into what we're about to get into with Justin in terms of looking at the best stocks in the world because it's still an opportunistic market. So what I'll do here is I'll just let Justin kind of walk you through some of the setups that he'd like, starting with SEZL, Sezzle.
So the reason I included Sezzle is I just think it really speaks to my process and kind of how I go and find winners. And basically what I'm trying to do is just find relative strength, whether it's relative strength against the broader market or relative strength against its industry peers. So the reason I included this chart is one, I think it's setting up again, and we'll look at that in a second. But this was a name that I jumped on early back in April, and the thing that stood out to me is just the strength that this chart was showing at the time. Back in April, a lot of charts were busted. They didn't have the big bases built out that we're starting to see a lot of stocks break out of these days. But Sezzle was a name that was just showing a ton of relative strength. It bottomed ahead of the indexes and ahead of a lot of stocks, and you could see what happened when it broke that downtrend it was in. It went on to go from I'm eyeballing this, but about 40, 50 all the way up to 190. So that was just seeing that strength obviously manifested itself, and then this stock emerged as a leader. It's not a big liquid leader in the same way that you think about Palantir or Robinhood. It's small cap. I think it's like don't quote me on this, but like a $5 billion market cap or somewhere around there. But it was a leader nonetheless, and it was showing itself. It was revealing itself at a time when a lot of stocks were not looking good, and there was a lot of concern about the tariff, the trade war, geopolitical stuff, a possible recession. So I just thought that relative strength was telling, and it turned out to be a pretty good hint of what was to come. And then I included the chart. This is a recent chart, an up-to-date chart. I actually got back into this name, and kind of my thinking was a lot of some names are starting to get a little more extended. And aren't quite set up, but what attracted me to this name recently is that this was a former leader that had a sharp pullback. It went from like 185 down to roughly 130, and it found support at that 50-day moving average. And you can see what happened. Buyer stepped in, and it's now starting to get back on track. At one point today, it was up 11%. Closed a little lower than that. Closed up only 6%. We'll take it, but this looks like it's starting to get going, and that's another part of my process too is just finding leaders, identifying them, and then not taking them off my watch list after I get out of them or they enter a pullback, because winners keep winning, and names. I think a lot of the names that led the early stages of this rally that have pulled back, I think will set up again and give are giving traders and investors opportunities to get involved in those names again.
Yeah, I'll cut you off there for a second because this chart in and of itself, right? I don't know if you guys are picking up on it, but it's up 981% this past year, right? It went from 20 to 150. And then the past 3 months, it's up 210%. So when I say Justin finds the best stocks in the world, I'm not kidding. Like, I'm being serious here. So I think another thing too is small cap, but $5 billion, right? That lumps it now into a mid cap, right? So it might actually end up joining the mid cap indexes. But this is a space, guys, that like I think if you're doing the analysis from that top down perspective and you're seeing risk come down the scale, right? You saw that early leadership in a name like this. And then what are you seeing now? You're seeing it set up again. So I doubt it's something that then just automatically fails, right? I think you're right when you talk about that rotation. So yeah, this name is kind of gone bonkers. And I think you're right. I think it goes from here, what, 150 back to 180. You're looking at pretty good return there. So great chart.
Yeah, for sure.
Let you kind of get into this next one, Dave. Both of these name in the financial space, which after this, we'll kind of talk through the XLF ETF, which breaking news made a new 52-week all-time high today. So I'll let you talk through Dave, and then we can kind of talk through actual financials just in general.
So yeah, Dave, funny ticker name, but pretty serious stock. It was a name I had traded a while back during that run up. I think I got in after it had that power earnings gap up back in May. But from there it went on to deliver really nice returns. And the reason I got interested in this and started looking at this name again, and it was a name that I kept on my watch list just because it was a massive winner in the past. But the setup looks eerily similar to the one we just looked at, and it's the same group. And there's a few small caps that I traded. Sezzle would be one, TSSI is another one, and then this one. At one point in time, these were, in my opinion, the three standout small caps, but they were different from a lot of the other small caps that have been working lately, in the sense that these names I don't think are as crowded, and they're actually moving on fundamentals. If you go and look on FinViz, you'll see the column that has all the sales and earnings growth. They're going to be bright green, and you're going to see really big numbers. And that's what this name has in common with Sezzle, and TSSI is the same thing. So as much as I love trading these story stocks, these robotic stocks, these space stocks, the quantum stocks, I've actually had some of my best trades in these sorts of names, in part because they move a little bit. Their character, their personalities, a little less wonky and all over the place. I think that speaks to the fact that they're a little less crowded often, and because they have the good fundamentals, I think there's some institutional backing in these names. But as far as technicals go, it's not as strong as Sezzle, because Sezzle pulled back and found support at its 50-day moving average. You can see this name is still trading slightly below its 50-day moving average, but it's starting to get back on track here, and that 180 level, 185 level, we've seen buyers come in. So this is a name that I think could get back on track as soon as next week. And similar to Sezzle, it's a name that if it gets going and breaks that little multi-week downtrend that it's in, I think it could potentially make a run back up to its recent all-time highs.
Yeah, I like it. I think one of the things traders struggle with sometimes, including myself, is looking online and seeing the stocks that are up the most this week, and then trying to either chase those names or find that exact setup right then and there, because a lot of times those might be up for a week or two. But that's why you keep names on your watch list that have been leaders, because sometimes they'll consolidate. And then when you get your eye off the ball, these are the ones that are then breaking out in the next couple of weeks. So it's that breakout pullback type of system here. And so I want to get to just in general, right? Like I'm the boomer in this group, it seems like, when it comes to some of these charts. But like, if you think about we can talk about old school financials. We can just talk about XLF here. And we have a beautiful pattern here, right? We had that base breakout. We had earnings. A lot of the big bank earnings pulled back to this breakout level. And then we saw the reacceleration. What did we see during that time? We saw RSI stay in that bullish regime. And now we're seeing that breakout. Right, the doomers will want to say it's a breakout on less momentum. I will say good. I will buy your stocks from you if you want to anticipate that not being a divergent. You want to anticipate that divergence producing something. But I think this kind of also just highlights in general there is risk to be had in financials. There's something taking place there, whether it's interest rates, but if you're seeing it down the cap scale and you're seeing it at this larger cap scale space, I think in general, financials is something that goes overlooked a lot of times for, like you said, which we'll get into some of these nuclear robotic names, but the charts can be clean, right? Some of those names in the robotic space, you really have to be creative with how you draw your lines for the chart to be clean. But I think in these financial area, the charts are pretty clean. I'd also just say, right, people want to talk about rotation out of leadership. I mean, this doesn't look like there's been any type of rotation out of leadership yet. So, yeah, I really do.
You kind of make financial sound boring, though. It's got the number one, or in my opinion, the clear market leader for the cycle, especially as of late. It would probably be Robinhood, and SoFi's looking really good. So there's some quote unquote sexy financials in this group for sure.
Yeah, and I would even just say if you think about the secular trend of structured products like options, right? You have IAI. You guys can look up that ticker. I didn't bring a chart, but you have the broker dealers, which are crushing it. And when do they crush it? They crush it in high vol environments and they crush it in bull markets. And basically all we've had this year is very high vol and then a ripper, right? Which just benefits them a lot because of the kind of nature of those zero DT options and their structured products. So now you have kind of like industrials right now or nuclear right now, right? Utilities right now. You have cyclical growth with also a secular undertrend pinning in those markets. And that's why the charts look beautiful, right? So yeah, I love this one. We'll we'll kind of get into the next one here, but I think financials, don't sleep on them.
Yeah, so this is another chart that I brought that I think really speaks to my process. So when we, think back to the Cecil chart, that one jumped out to me because it was, it was showing a ton of relative strength versus the broader market at the time. Remember, it started breaking that downtrend when a lot of, stocks were still in free fall. Next trackers, kind of similar, but the reason this one's so interesting to me is because of the relative strength it's showing versus other solar names. So this is a solar stock that makes these I think arrays that tilt. And what's interesting about it, and I think the reason its chart looks better than a lot of the other solar names is because it is a utility scale. So there's some AI component that I think is going to play into this, and I think that story will get louder and more widespread as the stock starts to pick momentum. But if you just compare this solar chart NXT to a lot of its peers, it looks way different. So names like Solar Edge, Enphase, First Solar, all those names, while some of them are starting to carve out bases, and it looks like they're going to try and get going here, their bases are not as big and as beautiful as this one, and they're trading, and a lot of times they're trading like 70% or more below their all-time highs. So this looks a lot different than the other solar names, and I think once solar gets going, whether it's because of a rates thing or just participation just increases due to rotation, I think this is the clear winner, the clear industry leader within the solar space. So I think this one's gonna just starting to get going here, and I think once it gets the the tailwind of its group participating more, I think this one has a ton of upside. And you can see on the chart, I have the its ticker versus TAN, which is the solar ETF, and you can see that it's been moving up and to the right for quite some time.
Yeah, I love it. I think the other thing I would just highlight about this space and this name is it actually has solid fundamentals, right? I think I was just looking at the 5-year CAGR for EBITDA is 30%, so has a good fundamental basis behind it. Also does report earnings on Tuesday, so just something to keep in mind for those who are listening after the market close. So you have this base breakout, right? You're kind of consolidating, so maybe that's what leads it to new all-time highs, which would be sick. But yeah, this is a good-looking chart.
Yeah, for
this
sure.
This is a good-looking one. the space in general is just hot, right? Like literally hot. Like I think you're in Columbia, right? I'm in South Carolina. It's hot. We need
So
utilities. We need
it's
energy.
the same weather here every day. So,
Is
but
it?
although today we had a little storm, which was
Oh,
kind of unusual. It doesn't usually rain like that.
okay.
But yeah, I think we're kind of drifting into sexier industries, sexier spaces. And this is Centrus. This is a uranium play. This is
Yeah.
a name that I've been writing for a while, and I would say this is the industry leader. Oklo's shown some good strength as of late, but as far as just consistent uptrend and strength, this name has been off the charts and has been super impressive. You could see on the bottom how it's been outperforming its peers, the uranium ETF, and what got my interest in this name was just following the space and looking at the chart. I was tracking the stock for some time before I got involved, and it was just trading better and stronger than a lot of its peers, and was starting to break out to new highs. While if you look at a lot of uranium stocks, I mean the picture's changed quite a bit over the past few weeks, but at the time I was getting involved with this name, it was already breaking out of a big base, and I think I might have gotten involved after it was breaking out of that second base. But nonetheless, it's been a huge winner. But yeah, I mean, again, I included this chart because I just think it really speaks to the process of doing the extra work, and not, if you want uranium exposure, just putting a few extra minutes and putting a little bit of extra work and try and find the leaders, because they often trade a lot cleaner and they deliver bigger returns. And then even when there are pullbacks, even if you're looking at a name like this, which has been a high flyer, it tends to hold up well, and there's just a stronger bid under this name during times when we do see volatility spike up for the group.
Yeah. You nailed it there. I think guys listening at home, pay attention to that bottom panel, right? Because not only is Justin looking at absolute leadership, right, in a stock that's up, 250% the past 3 months. Like I said, sometimes the charts don't even do justice to kind of moves these stocks make. But also that bottom panel, right, leadership sector, which has a lot of news around it. Why not take that extra effort and look at it on a relative basis to names in that space? Because like Justin said, then you get the leadership of the leadership, and that's where you get these outsized returns. Hence why I brought Justin on, because he finds some of these charts and I'm like, what's the secret sauce, man? And he's telling us it's relative strength. It's putting in that extra work to look underneath at those relative trends to really pair them together to find those monsters. So yeah, it's a beautiful chart.
Yeah, and I wish there was some secret formula,
Me too.
to find these names. I always get people ask me, how do you find these stocks? Is there a scan? And I wish it was that easy. I wish I could just do a scan every morning and it would tell me the best stocks. But it's really just putting in the work and putting together. I do scans from time to time, and then I'll take what I think is interesting, what's showing strength. I'll throw it in watch list, and then I'll watch those names. And sometimes you got to observe the space for a little bit before you get involved, so you can see which stocks are actually worth putting your hard-earned money into.
Yeah. If it was just a scan, there would be an ETF that's right,
Yeah,
like
exactly.
some relative, what would they call it? Like relative strength spec ETF. Like that would that would have $100 billion in assets in a month, right? But if it was that easy, everyone would do it, right? If it was that easy,
Yeah.
everyone would have been in this name. So yeah, it's funny because it's always easier said than done. But
yeah. Having said that, though, the best time to do scans is right after a pullback, right after a big red day, or ideally a few days of selling, or even a few weeks of selling. For example, back in April, you could have found names like Roblox and Robinhood was one of the names that bottomed early, and Palantir, and those names were just starting to show strength when a lot of stocks were still getting their butt kicked. So you could have done something like 1 month performance. You could run a scan like that when there are these sharp sell-offs, and you can see what's up during those periods, and that can point you in the right direction.
yeah. All right. We're let's run through a few more here and then let's get into earnings. Let's quickly talk about Bloom.
Okay, Bloom. So yeah, I'll just run through this really quickly. So yeah, you were kind of asking, what other areas I'm watching right now, and it's kind of interesting. It's almost easier to find the winners when not as much is working because it's really obvious. Right now, there's a lot of different areas working, and what got me attracted to Bloom is, in my opinion, I think the AI energy trade is the most compelling theme at the moment. There's so many different ways to play it. You look at the nuclear names, the power producers like GEV, and there's just a constant news cycle, whether it's coming from the White House, these collaborations between different companies, or earnings reports. So there's endless catalysts for the space. And this is a name that I got interested in. It's a fuel cell name, and I got lucky on this one. It started to break out, and I thought I would have a little bit more time to build a position, but it announced a partnership with Oracle, and just had a huge move on that yesterday. We saw some nice follow through today, and the month's not finished, but it's on pace for its highest monthly close since I think 2001. And so this could be definitely a name to watch going forward, because we've seen the nuclear names run, we've seen the modular reactor names run. What if fuel cells is the new narrative that really picks up, and this looks like the clear leader in that space.
Yeah, my only comment there is, I remember when nuclear was political from a side of like hating the earth, but it seems like you get these kind of like industrials, right? You get these bipartisan areas of the market that we also know need investment. And when you catch those trends, I mean, they can run forever. So yeah, I love Bloom. Let's highlight.
I think the what's changed around nuclear is that mega cap tech has all this AI power demand, and they want nuclear, and they get what they want because they run the country. So I think that's what's changed the narrative at the high levels.
Love it.
Is that mega cap tech wants it?
Yeah. Here we got one more.
Okay, so this is another kind of story thematic theme. This is a battery tech company, and with a lot of different areas that have been running wild. I'm always trying to look out for a next potential theme, and I think this battery tech theme is definitely one to watch. I know you have I know you're knowledgeable on the electrification of the grid. I wish I was more privy to the fundamentals of this company, but I just started getting involved with it because it started to wake up in a big way. It had a good week, and then the month's not in the books yet, but look at how that monthly candle is shaping up. It's starting to break out of this pretty big base, and looks like it's about to put in its highest monthly close in 3 years.
Yeah, solid chart. Yeah, I think the fundamentals show up in the charts, right? I don't think you don't have to understand it more than you want. And also, I'll just say people lie about understanding the fundamentals too. Like, who understands the fundamentals of quantum computing? Not me, right? Who understands the fundamentals of, right? Who understands the actual total addressable market of AI? No one, right? Because we don't know. Like, no one understood the total addressable market of cell phones. No one understood any new technology. You don't evaluate it via those fundamental cases because we don't have anything to compare it to. What do we have? A technological revolution. We've had one from this degree, right? The internet, but is also paired with an energy revolution at the same time. When have we had that? We haven't. So N equals 1. So whatever you're putting in a discounted cash flow model or total addressable market model, it's going to change, right? So which is why you see volatility at the beginning. But yeah, beautiful chart. Sure. I'll skip Oklo, right? Another one, beautiful. We're talking about the same areas, right? Using similar approaches. We'll skip AVAV. I do want to just quickly kind of highlight some earnings coming up this week because I think, right, I wrote about this to some people this past week, and I've been writing it a couple weeks. Like, you have straightaways in the market. If you think about a bull market, the car is accelerating and it's going fast, right? And it's a nice car, right? Bull markets are great cars to drive. And earnings, a lot of people see earnings as, right, like red lights, and they stop. They slam on the brakes. all earnings are is turns in the road, right? So just all you do is you hold on to the wheel and you pay attention, right? Because you're now in traffic. It doesn't mean you have to slam on the brakes. It just means you have to pay more attention. You're not in the open countryside anymore. You're starting to enter the city a little bit. And right, what we see this week is Wednesday, right? I just highlighted here on Wednesday and Thursday, you have one, two, three, four of the Mag 7 names reporting with Meta, Microsoft, Amazon, and Apple. Also, Robinhood. I think Robinhood, as right, Justin kind of mentioned, Robinhood is now important to the market because one, it's one of the best performing stocks in the world. And two, it's part of the narrative around the retail investor and what retail's doing with a lot of these small cap. And I don't want to use the term meme because there's been frauds in the S&P 500 before, right? There's been people who have been fooled before in a lot of ways by companies. So I don't want to say meme and I don't want to discount that behavior because look, Carvana's on here. And what has Carvana done, right? That was considered a meme stock. Now it's a viable business, right? So, and Robinhood at one point was considered a meme stock. And now, right, it's one of the more important earning reports. Same thing with Coinbase. Same thing. Look at MicroStrategy, right? So everything a year ago, price kind of changes sentiment around these names. But anything you're highlighting here before we get into the charts, Justin? Any you're focusing on?
Well, other than ones you said, I think SoFi is looking pretty interesting in here. It had a huge move. I was watching it. I didn't get involved. It kind of just ran away without me. And I was talking to one of my friends who's does similar work, and he was telling me that he thinks it's moving on the stable coin narrative. Apparently, they're getting involved in that space pretty heavily. So I think SoFi is pretty interesting. It's just shown a ton of strength as of late after being relatively quiet for a while. Just kind of went vertical as of late. So that would be probably the number one name I'm watching. There's a ton on here though to choose from.
Yeah, there's a lot, right? That's why you just kind of have to pay attention. You don't have to trade the earnings, but you have to be aware of them. Other one I'll just highlight here is because we're talking a lot about uranium, but CCJ Cameco reports before the open on Thursday, so that could kind of be the catalyst for those next leg higher. Or right when you're a technician, sometimes you love to see those earning reports come out and people sell off right into our support levels, right? And so either way, it's a beautiful thing to see, kind of, especially in leadership, because they're going to remain leadership as long as they stay above those key levels. And if they don't, when they get back above them, you look at them again. So let's just look at a couple of these names quickly. I won't talk too much about them, but you look at Meta, beautiful charts, right? You have this base, you have kind of a cup and handle, cup and channel, whatever you really want to call it. The names don't matter. Don't get caught up in the semantics. And then I just ran an AVWAP from the last earnings. The reason I did that is because I think if this is a good earnings report, right, this stock is breaking out to all-time highs. It's going 800. But you want to know your levels that you might be trying to find support, especially if something's leadership. And I think for Meta, I'm looking at that anchored earnings VWAP around, unfortunately, 666. So fitting for Zuckerberg. But I think in general, Meta, it's just a beautiful business model. Obviously, it's one of the largest stocks in the world. It's silly. It wouldn't be if it wasn't. But just a beautiful chart.
Did they report this coming week?
Yeah.
Yeah.
So they're Wednesday after the close.
Meta will be interesting. It's obviously there's been some more exciting kind of high flyers as of late, but Zuckerberg's shelling out NBA max contracts to get these top AI guys to come over to Meta.
Yeah.
He's not a guy regardless of your opinion on him, he's not a guy to bet against. And he's an innovator, and he's even the company survived the short-lived pivot to the metaverse, but he seems to be going all in on AI. So I think it's going to be a super important report, and it could be what gets Meta to break out of this little base it's in and send it off to new all-time highs. So anything could happen, but I'm leaning optimistic on Meta heading into earnings.
For sure. Amazon, another one. These charts are beautiful, right? We're in a bull market. I think the thing I love about this Amazon chart that it highlights for me is this price action from the lows and then this breakout, because this is what you see in bull markets. This slow drip higher with a down day that makes it look scary, drip, drip, drip higher, down day that you get fearful, drip, drip, drip higher. But momentum, right? Momentum stays strong because the down days never really outweigh the up days. They just feel like it because as your account grows, you get nervous, right? So as your money goes up, right? That's why older people tend to be more nervous about finances. Why? Because they have a lot more of it than a 22-year-old who has, $30,000 in debt. So yeah, it's just beautiful chart. Amazon once again, right? 200, that'd be crazy if it came down to 200, but even this breakout around this 220 level, yeah, I mean, it's just not bet. These aren't companies you bet against, but you just manage your risk and watch levels heading into those numbers.
Yeah, for sure.
And then this is the one to me that's probably the most interesting is Apple, because Apple's been a laggard, right? All those other charts are going up and to the right. This one's kind of basing. And you can see the consolidation here taking place right before earnings. And it's below the 200-day. It's below the all-time high AVWAP, but it's above that April low AVWAP and just consolidating. So I think to me, this is compelling because if there is some sector rotation or defensive rotation, Apple's a name that sometimes sees, right, consumer staple-like behavior if that occurs. And so I actually like allocating to it if we kind of break out here, even though it's been a laggard, because I already have a lot of momentum names, right? I already have a lot of relative momentum strength. Maybe this is one of those areas that Apple's the one that catches up, because you'll see that in the Mag 7. The two laggards right now in the Mag 7, Tesla, Apple. The leaders in the Mag 7 right now, right? We have Meta who's crushing it. We have Microsoft who's crushing it, right? And so you see that intra Mag 7 rotation that occurs. But yeah, so it's an interesting one. I think this is the most interesting chart heading into earnings.
Yeah. Apple's a little too slow for my case, but no, it is a good chart.
It's just, I mean, it's right. It's just huge to the overall like S&P, right? In terms of the reaction.
Oh, no, for sure. Yeah. Definitely want to see it participate.
Yeah. So just not break down, but. And then the last thing I just wanted to highlight, just want to give a shout out to materials. Something, right, like Mr. Boring Boomer over here. Materials look great. Don't sleep on them. But that's all I had with that, guys. Thanks for tuning in. Justin, I appreciate you joining. You guys can reach out to Justin on Twitter. Anywhere else, Justin, people can kind of find some of your work and what you're posting. I know you're always posting charts, but anywhere else?
Yeah, I mean, Twitter's the easiest place to find me, but then, I also have a weekly that people can check out that goes out every Wednesday on Risk Hedge. So they could read that as well.
Great. All right, guys. Well, give the video a like, a thumbs up on YouTube. And honestly, leave some comments. If you guys have any questions, Justin and I can kind of get back to you. But appreciate you guys tuning in. I'll be back next Friday. And then look out for my Sunday stock list coming Sunday, where I just share some of my charts I'm watching for the upcoming week, which some of these will probably be in there. But appreciate it, Justin. See you guys.
Yeah, thanks, man. Take care, everyone.